This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your source for the latest Iowa ag news headlines right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, Mark Magnuson, and Andy Peterson. Now, from the IARN studios in Des Moines, here's Riley.
Good day and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Riley Smith. Today is Monday, February 24th of 2025. We are so glad you can join us for today's show. In today's episode, I talk a little bit about green ammonia. We'll also have a check of the closing markets with Robin Schmahl of agmarket.net. But first, we'll take a dive into that conversation with Talus Ag CEO Hiro Iwanaga, as we talk about green ammonia and how they are getting ready to ramp up production on that. Just made that announcement of the official commencement of green ammonia production. Hiro, if you could just tell us a little bit about that production and how exactly that's going to work out.
Yeah, no, Riley, thank you for having us on. We're excited to talk about it, and we're really grateful to our launch partner Landis as we start to deploy these modular green ammonia systems across the Corn Belt. But as you said, we commissioned our system just a couple months ago here. Our system is in commercial production now. We're focused on the low cost, local production of ammonia and all the benefits that come along with that. But our system has been commissioned. What we're really focused on next, though, is we're really advancing 78 sites across the Corn Belt, focused on Iowa, South Dakota, Nebraska, Kansas, Indiana, Illinois, I think a couple others. But our plan is to deploy these modular systems to domestically, locally produce cost competitive ammonia for American farmers pretty rapidly here over the next couple of years.
And then as a reminder for our listeners and viewers who maybe haven't seen our coverage yet on green ammonia and how exactly that works, what is green ammonia?
Yeah, absolutely. So ammonia, as you all probably know, second most produced chemical in the world, 80% of which is used for fertilizer. Green ammonia is chemically the same as ammonia. Ammonia is ammonia. For what we call gray ammonia, normal ammonia, the inputs are power, water, and either natural gas or coal. In our case, our only inputs are power and water and air. And so because our inputs don't use any natural gas or coal, with renewable power, we can produce ammonia. That's ammonia. It's the same as any farmer is used to getting, but it happens to be carbon free.
And then, of course, one of the big benefits that I think is kind of under the radar right now for that green ammonia is the fact that it's produced here in the States. And with potential tariff disruptions, that could be a problem with sourcing that ammonia. So, how does that kind of weigh into
Absolutely.
A solution to that problem?
I think it's an interesting question, right? When we think about our benefits to farmers, it's cost, it's reliability, it's sustainability. I think people, when we think about green ammonia, immediately think about the low carbon or carbon-free nature of it and the sustainability benefit of it, and that's valuable, right? We're working with some of the large ethanol companies, and they're really excited about having a lower carbon or no carbon fertilizer to work with farmers in Iowa and Nebraska and across the Corn Belt to produce lower carbon fuels. I think what's actually much more impactful and what we're really more focused on is our green ammonia systems can be really small. And so it allows us to deliver these systems either at for example, at a big Landis distribution site in some of these cases, we can deliver them on farm. So a farm could be completely cut off from the broader nitrogen fertilizer chain and say, I have an on-site ammonia system, on-site ammonia storage, and we're excited about that possibility. But when we focus on it now, it's we can produce ammonia locally and cost competitively.
And then, Hiro, what's the timeline for that green ammonia production for it to be used by farmers, and how can they get in touch to make sure that they're staying up to date on that and they can use it?
Yeah, absolutely. Right now with farmers, the best bet is to work with our launch partners, Landis. In Iowa, it's Landis, and we're really excited that we're really excited to partner with a group like Landis that has really deep capabilities around everything else associated with the ammonia, whether that's storage or application and the handling of it. But for farmers to access green ammonia, right now the right answer is call Landis.
All right, Hiro, thanks again for your time today, and good luck as you guys ramp up this production.
Thanks.
That again was Hiro Iwanaga, CEO of Talus Ag. We'll take a look at the closing markets next, but first here's a word from our sponsor, the Iowa Soybean Association and the Soy Checkoff. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
Welcome back to Ag Matters PM on the Iowa Agribusiness Radio Network, and it's time now to take a look at the closing markets with Robin Schmahl of agmarket.net. First off, Robin, to start off this week, how did the grain markets trade today?
Started off negative. It was not very friendly coming off of the weekend. We were a little bit stronger overnight, but then weakened during the day. I mean, our export inspections were decent. Corn was at 1.134 million metric ton. They were looking at 1 to 1.7, so lower end of the range, but still good. Beans at 858,679 metric tons to the top end of the range, and wheat at 375,546 metric ton. That was kind of middle of the range. So it really, that was not an issue that put pressure on. Maybe some of the pressure came on as there was a long range forecast over the weekend that showed that we could be seeing some good weather for spring planting, and that sticks in people's minds or in traders' minds. Ag Rural, they estimate that 64% of second season corn planting done in Brazil, but they did lower soybean production to 168.2 million metric ton versus their previous 172. So that was a pretty big revision, but again, nothing supported the market from that. Now, the U.S. Outlook Forum that's happening later this week, there's some expectations that it should show an increase in corn plantings. And we've been talking about that for a while, so that's not going to be really a big surprise if that happens. Now, CoBank, they estimated corn production, or I should say plantings, at 94.55 million acres, up 4% from last year, and beans at 84 million, down 3.6%. Spring wheat at 10 million acres, down 5.9%. Maybe the spring wheat a little bit more on the positive side, but really we kind of, what they estimated for corn and bean acres, pretty much kind of been, I think, in the market already. But wheat did not hold up today. I think we had the big rally based off of the cold weather, and we did have some good or some issues with Russia there with some of their wheat, but that probably ran its course. Now the market's correcting a little bit. Now, two different things that have probably somewhat of an issue is BP is ditching their renewable fuel goals and returning their focus to fossil fuels. That's kind of a real deal. That's strictly monetary, basically, because the reason they had for the shares of BP were not performing as well as the shares of others. So it's kind of taking a setback from that standpoint. And then the U.S. Trade Representative is proposing a port fee for Chinese vessels or Chinese-built ships. They're coming in, and each port docking or unloading would cost them $1 million for each port of call. So some of these do 3 ports of call with their shipping and their containers that come in. So each one of those would be $1 million. And then it would scale down depending on when these ships were built. So it's not a tariff per se, but it kind of is a tariff. It's penalizing where the ships are coming from. It's just kind of is mind-boggling, but you just don't know where this thing is going to end, and what the issue is going to be there as time goes on. What are they going to be looking at, retaliating if they are reciprocating? What's going to continue to go on? So the market's still kind of up in the air over a lot of different things. But I think today's trade was mainly based off of the better spring and then some of the projected plantings and what we're looking at.
All right, Robin, and then on the livestock side of things, how did the cattle and hogs trade today?
Well, cattle were higher. That's based off the cattle and feed report. Traders, they reacted positively to that, even though it was somewhat neutral to friendly. They reacted more positively. On feed numbers on the report were 99%. Trade was looking at 99.3, so a little bit less than that. Placements at 102%. The average estimate was 103.7. This was released on Friday afternoon after the close. Marketing's at 101% versus 102.1. So you look at those, and they're really, in essence, neutral. But now that that's out of the way, the traders reacted positively because we did see quite a bit of a decrease here recently. And last week, cash was down $4 in the south and $5 in the north. So the market's kind of trying to determine whether there's a bottom there. Box beef's been under pressure, but at the noon report today, choice was up 297 and select up 107. So on the cattle side, we did see some nice, at least some buying interest today. September and October feeder cattle, they left chart gaps this morning. They led the charge over $4 higher, the feeder cattle contracts. But I think much of it has to do with being overbought, or oversold into the report. Now, on the hog side, buyers did not step up today after the liquidation we seen last week. Hog futures were lower, not by a lot, but still lower, keeping some pressure on that market. There was lower cash on the daily direct morning report, down $1.29. That was anticipated because we did see strong cash all last week. Cutouts this morning were up $1.84, but there's concern over ongoing demand. And that's what's really holding back that market right now. There are chart gaps way up from the beginning of last week, but it's going to be really difficult for those futures to get up to that point unless we see some consistency on the demand side.
All right, Robin, lots of great information today. For anyone who would like to get in touch and learn more from agmarket.net, how can they do that?
Well, they can call me directly if they would like at 877-256-3253, or they can go to our website, agmarket.net. There's an 844 toll-free number there. You can feel free to call in.
All right, Robin, thanks again for the great analysis as always, and we look forward to talking again soon.
Thank you. It's always a pleasure.
That again was Robin Schmahl of agmarket.net. We'll take a look at how the numbers close through the market window at iowaagnet.com. March corn down 8 3/4 at 482.5. March soybeans down 10.5 at 10.29 even. March soybean meal down 3 even at 291.80. March soybean oil down $1.11 at 45.70. Chicago wheat down 11 even at 5.79 even. Kansas City hard red wheat down 12 3/4 at 5.96.5. Minneapolis spring wheat down 10 1/4 at 6.21.5. March oats down 5 1/4 at 3.54 even. On the Merc, April live cattle up $1.15 at 195.10. March feeders up 4.35 at 272.30. April lean hogs down 27 cents at 87.40. Pork cutout went unchanged at 96.10. And March Class 3 milk down 4 cents at 19.02. And that's been a check of the markets here on Ag Matters PM. That also brings us to the end of today's show. You can find all of our content on our website at iowaagnet.com. Also follow us on social media at Facebook, X, LinkedIn, and TikTok, and find our video content as well as previous episodes of AM PM on our YouTube channel. Don't forget to subscribe and hit the notification bell to see when those videos go live. Check out as well our free morning, midday, and closing market podcasts, as well as the Iowa Ag Matters podcast and Pods of Potential. Find those on your favorite podcasting service at Apple, Amazon, Spotify, and Podbean, or under the podcast tab at iowaagnet.com. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Riley Smith. On behalf of Mark Magnuson, Andy Peterson, and Dustin Huffman, we thank you for watching. This has been Ag Matters PM.